So, morning everyone, and thank you very much for your time. Thank you very much for returning. This is webinar 2 in a series of 4 that focuses on the fundamentals of carbon accounting. In this particular webinar, we're going to focus on how exactly you go about measuring your carbon emissions. So at first, it can seem like quite a daunting task. However, I suppose once you break it down into manageable chunks, it can be quite easy to identify how to get started and how to go about it. But firstly, we're going to recap on some of the sort of key points from last week in our first webinar. So some of the key things to remember will be that firstly, the Greenhouse Gas Protocol is the global standard for carbon accounting. It is, as I would have mentioned last week, the Holy Bible, and everything else stems from it. So if you're ever unsure about what framework applies to you or where to get started, just focus on the Greenhouse Gas Protocol and you'll be 80 to 90% of the way there. All greenhouse gases are measured in terms of CO2 equivalent. That allows for a universal standard across the board and allows it to be quite easy to understand your emissions in context compared to another industry or to another organization similar to yourselves. Additionally, greenhouse gases are split into 3 scopes. So you have your scope 1, which is your direct emissions, being in your direct control as a business. These are typically generated by company-owned sources such as your property, your vehicles, air conditioning. Think fossil fuels that burn during the course of your business's activities. Scope 2 is indirect emissions that you generate through purchased electricity from the grid. And then scope 3 is effectively your value chain emissions. It's anything beyond scope 1 or 2 that hasn't been classified there or mentioned there. Scope 3 is typically the hardest to gather, or it's perceived to be the hardest to gather. It is becoming much easier. I wouldn't worry about it if you were just starting out. It can actually be quite measurable. And typically the advice we would give would be to start small and build it up over a number of years. Typically we tell businesses to focus on your commuting and work from home emissions, any server emissions and business travel emissions in the first place. One thing to remember on the 3 scopes really is the 3 Bs. So scope 1 is what you burn in fossil fuels, scope 2 is what you buy from the grid, and scope 3 is anything beyond that. If you can remember the 3 Bs, you'll always remember how to classify your emissions. So moving on to today's presentation, we've done the recap there just now. So we're going to get into understanding greenhouse gas emissions and the various data sources within them. So when you set about trying to gather your data, gather your utility bills, your invoices, and so on, there are different classifications for the data sources, as you would expect, whether it comes to a financial audit also. You have your primary data and you have your secondary data. Obviously, in an ideal world, everything would be primary data. In reality, that's not completely practical because, as we mentioned, you have less control over your scope 3 emissions. So if some of your suppliers don't yet engage in carbon accounting, or maybe they don't have the facilities to share accurate data with you, you'll have to resort to secondary data. So primary data, to be very specific, is activity data or consumption data, as it's known within the industry, that is taken directly from meter readings. So say your raw utility bills, you will actually have a kilowatt hour reading on that. That's obviously considered to be the most accurate data. The sort of rule of thumb is that secondary data is encouraged and can be utilized when your primary data is unavailable. Secondary data is your use of estimates or use of averages or an intensity factor. So for example, there's data out there from UPS, who do a GRI report every year about the average carbon emissions generated from the shipping of a parcel with them. Now, obviously, they ship millions to possibly billions of parcels a year. So it's a perfect and an accurate estimate to use if, for example, you only know how many parcels you've shipped in a period. There's obviously pros to both and cons to both. Primary is higher accuracy. It's tailored more to your business's own operations. It reflects your actual activities, and it also is increased compliance and transparency. The cons, though, is that it can be resource intensive. In terms of getting all that data in the initial years, it can be quite time consuming. We would always state that it's something you should always work towards, that if you can improve one process of the data collection per period or per quarter or whatever that time period is to move towards that primary calculation, towards that primary data, that's excellent. That's brilliant. There can be data gaps in primary data, not always available for every source, as we would have touched on there, and it can be complex in order to gather it the right way. Hence why we'll always talk about continuous improvement and slowly easing your way into it. In terms of the pros for secondary data, you've your ease of use. If you're looking to establish a rough baseline and get up and running fast and then implement those processes to move to primary, secondary data can be perfect. It is time saving in comparison to primary data, and it allows you to get very broad coverage of all three scopes. So you'll get that rough baseline quite easily using secondary data. Obviously, it's less accurate, and there's less specificity, um, and there's a slight risk of the data being more generalized. What I would say though is don't let any of those cons turn you away from using it. As we would have touched on last week, the key really to carbon accounting is transparency. So if you're relying on secondary data to get you up and running, absolutely no problem at all. Just call it out in any reporting you do that, look, this is the estimate we use or the average we used, and we did it so that we could get broad coverage, or we did it so that we can get up and running and put in place those necessary processes to gather primary data and improve as we go along. Once you do that, you're absolutely fine. It's no problem at all. So we're going to move on slightly now. Hopefully you have an understanding there to understanding the scopes. And then we would have touched on the scopes briefly. Slides are showing. Sorry, I see one question there. Maybe someone can just confirm for me. Are the slides available to you guys on your screen, or are they is it just myself talking? Go ahead there, Barry, if you're asking to. Oh, I've got slides are visible. Okay, perfect. Thanks very much, all. Cheers. So, moving on to understanding the scopes, we would have touched on this briefly, but I'm going to sort of go into it in more detail beyond the three Bs. So, taking a deeper look at your scope one emissions, typically for most businesses, the three categories within the sort of the greenhouse gas protocol that you'll touch on. You have your buildings heating, which can be gathered from your utility bills typically. If you're in a situation whereby you rent your premises or part of your own premises is rented out to other tenants, you can use square footage if there's not smart meters installed to determine sort of what's your usage versus your tenants. You will also have vehicle usage and you will have air conditioning emissions if that applies to your business. Vehicle usage is one that sort of funnily enough can be quite confusing at times in terms of trying to distinguish it from business travel emissions. The, I suppose, example I always give or try to give to make that explanation easy is that your business travel emissions is the once-offs. It's the emissions that are generated, for example, traveling to a conference or say maybe doing a one-off site visit that employee wouldn't typically do. However, the vehicle emissions that we refer to it is something that happens in the everyday course of business. So think maybe a sales rep. You're expecting that sales rep to be on the road calling to stores or calling into your clients to sell them the products, upsell them, and so on. That's your vehicle scope one emissions. However, as I said, the conference travel or the rare, unusual travel, that will fall into your scope three business travel. So it is important where possible to distinguish between the two of them. And if you can't, we can work with you to sort of create estimates around that that'll help you understand it in that regard. Your air conditioning emissions is one that people probably are quite surprised about. And now it's typically one that only impacts older air conditioning units. So the older air conditioning, you see sound has gone now. Is that for everyone or is that just for Mick? I hope not everyone. I know the webinar is being recorded, Mick, so if you are having issues with sound, it will be available on the recording. Um, So I might just plow on, and if we can get it solved, perfect, and seems fine here. So it might just be a one off on your device, Mick. Thanks everyone for the updates there. So as I mentioned, the air conditioning units, typically the older ones, they tend to leak slightly more. And what is leaking from them is the coolant that the technician will input in, say at the very start of the period. That coolant is actually quite toxic in terms of carbon emissions for the environment. And 1 litre, if it leaks, for example, is over typically 2,000 kilos of CO2 on average. Now, the type of coolant you use, the replacement coolant you use, that can all give you sort of quick wins, low hanging fruit, and so on. But it might be a case that sometimes the best bet is to actually just swap out the machine. Um, Typically, how you would find that information if it's leaking or not is if you think of getting the car serviced, your garage will give you out a slip to state exactly what they did, if they topped up the oil and so on. The technician that comes to service your air conditioning units will do the exact same thing. Typically, the operations team or the facilities management team will have access to that document, and it'll say something quite similar like EF134 2 litres, which to me tells me the coolant specifically that's used and also how much it was topped up by. That allows us to know also the level of leakage within the system. So moving on to scope 2 emissions. If you understand how to gather your scope 1 buildings heat emissions, buildings electricity is simple. It's the exact same process. Ideally, you'll use your utility bills, but if not, you can take estimates, as I said, from the square footage, total spend values. One probably tip that people don't realize to look for is that on your utility bills, specifically your heating, your electricity, there's a thing called a fuel mix. So your specific provider will actually detail their fuel mix. And by their fuel mix, I mean how much of the electricity they supply is renewable and how much is generated from non-renewable sources. So while you mightn't be specifically paying for, renewable energy, your consumption might actually be 50, 60% renewable. And so you should be getting the credit for that. So that's one thing, even when you leave today, if you have access to the utility bill, go on and look at it, and you'll actually see your own supplier's current fuel mix and then the all island comparison in respect to that. That in itself can be one of the quickest wins when it comes to your scope 2 emissions. Typically people will always look firstly at, okay, well, we can get solar panels in, we can, LED lights. Sometimes it's as quick as one, making a phone call to switch supplier, which is slightly more cost effective, or just realizing, okay, we're actually on renewable powered energy. And then obviously if you want to go further to solar panels and so on, that's no problem at all. We can actually account for your yield from renewable energy as a result of solar panels you might have installed on site. So, as I would have mentioned sort of at the top of the call, scope 3 is anything beyond what we just discussed there. Typically, the hardest to gather, or there's the assumption out there that is the hardest to gather because you tend to have the least control over it. Um, in my own experience, it's actually quite manageable, specifically for most sort of office-based businesses, especially. Um, and one thing to always remember is that estimates are allowed. So for most businesses, what you're going to be looking at in scope 3 is your servers. If you use Google, Azure, AWS, your life is very easy. They actually have dashboards that will record your carbon intensity for you. You simply get the IT team to log in. It takes about 48 hours to pull down your specific data, but they'll actually be able to tell you the average carbon intensity per user on your system, even from the server usage. Business travel, you're looking at expense reports. If, like me in the past, when you claim your expenses, you don't give a lot of detail, that's going to be one of the first sort of improvements on the process. So you can always use the total spend value for, say, a flight or hotel and so on, and there's nothing wrong with that, but you can go further. So, for example, if you were to tell us, you flew Dublin to London Heathrow or London Gatwick, you can actually calculate the exact flight path, flight distance from that, and work out the specific emissions. You can go further if you're on the BA flight out of Dublin that I think goes to Heathrow. There's actually a sort of premium economy section to that. You can actually account for the fact that your seat is taking up more space in that flight as well, with that little extra detail. Similar to, say, your hotels, if you specify the city that the hotel is in or the country, you can get specific location based emission factors for where your hotel stay is. Moving on from business travel, work from home and commute is probably one that businesses would typically say, would feel difficult to do. Actually, probably the easiest. There's a simple 10-question survey you can issue to staff over an email or via a link, and even a QR code has been done in the past. Staff fill that out. The results will come back live into the platform or even back into an Excel that can be downloaded. And from that, you can calculate your work from home emissions down to the hour and your commuting emissions to within a few kilometers. So the work from home emissions assumes, for example, that the staff use a laptop and a monitor at home. It accounts for the extra heating and light that would be on as a result of that person working from home. And it also accounts for, say, your 4 weeks holidays, or if there's 5 weeks holidays, all you have to do is let us know. Um, the commuting emissions take into effect the type of car they use to get to work. I say car as I'm based in Ireland, so most people are driving to work. But if it's a public bus, if it's, for example, a train, all of that is accounted for within the calculations, and the level of days they're going into the office also. That is probably the easiest thing to run, and you could set that off in your first day of data collection while you go and gather the other data, and it'll be ready for you at the same time as all the rest of the data falls in. Uh, Other areas that might apply, it depends on the type of business. You'll be looking at shipping, you'll be looking at potentially production, and events. Events would be, say, like a big, large Christmas party, or if you hosted a conference, for example, you're responsible for the emissions there. Shipping can be difficult and it can be easy. It depends on who you're with. So, for example, DPD have gone carbon neutral. So they can actually produce a report for you saying how many emissions were saved per month, per quarter, by using them. If you use some more local people, it can be more difficult. You'll have to rely on estimates, but it's quite simple in the sense of, if you're starting with more local people, there's a sort of clear path there to getting carbon neutral shipping around the island, or even in the UK as well. It's no problem. So we've kind of gone through the data, where you need to get it, or what sort of the source of the data is, but we haven't really discussed sort of how to actually track it over time and how to collect it. So I suppose I always joke in my demos or my onboarding calls that go out and buy a box of chocolates or a bunch of flowers for the accounting and operations team, because you need to make best friends with them, especially if you envisage this being an ongoing, I suppose, task that you're going to be doing. They will have all of the utility bills saved down. The operations team will have the likes of your service documents for your air conditioning units, and potentially even your vehicles as well. The data collection process itself, now that you've made friends with that team, how is it collected? How will you store it? You should ideally be thinking about auditability. The reason I say that is CSRD is a sort of hot topic in the space at the moment, and one of the requirements for that is the ability to audit your emissions. It's mandatory. Now, there's a light version of CSRD that will apply to most sort of businesses at the moment, and there's no audit necessary. But as it sort of becomes, or as CSRD expands, and it will over the next 4 years, more and more of you will fall into that scope. So if you put in place those processes now, your life will be much easier. What we mean by auditability, it'll be quite similar to financial audit, is that you have access to the raw data. So think your utility bill, that those bills or the kilowatt hours that you pull from that it tracks back to the calculation, or to the record as we call it, for each individual carbon emissions calculation. And if, for example, you converted on a unit of measurement, why you did it and where you got the conversion factor from. Sort of, apologies. That's not supposed to be coming up. I thought I turned off my notifications. My mistake. Um, the auditability, getting back on track, is going to be that overarching principle, almost slightly bigger, and it feeds into that transparency going forward. So in terms of how often you want to collect your data, it's really whatever works for you. We would ideally say collect it sort of at least quarterly, if possible. The reason being for that is you can identify gaps quite quickly then, as opposed to 12 months later trying to track down an invoice from the previous January, where time is difficult then. Um, Additionally, by doing so, you really sort of drive home the processes that people have on board, um, that it becomes a sort of everyday or an every month task, and it makes the sort of process much easier for everyone, and it improves buy-in. And sort of lastly, on sort of how you track and store it. It depends on the type of business. So on the platform, it can be stored and tracked easily. Some people like to use Excel templates where, say, each month or each quarter they can come in and just fill in the necessary data and it's stored there. Whether it's saved to the cloud and multiple people have access, that's fine. If you're doing something like that where you're tracking it on an Excel, maybe create like a sort of shared drive where you can also upload the raw data and have that filed away neatly. Um, because as I said, that'll all go towards the auditability of the records of your calculations and the transparency that everything is one place, that it's sort of role-based access control, who its access is tracked, why a change is made, all of that sort of stuff. Then it'll be easy to populate and go from there. So moving on to setting organizational boundaries. So you have your data, you've gathered it, you've worked as a team, and you're ready to calculate. So you need to define effectively what this comes down to, what emissions you'll measure and the approach you'll take by category. There are sort of three options really in line with climate science, and the approach you choose will depend on what you're measuring and the data available to you. So you can take multiple approaches depending on it. You have the operational control approach where you'll measure effectively your scope 1 and 2 emissions, areas that are under your direct control as a business. And you can say, look, that's what we're doing and we're going to work on scope 3 going forward. You can take a financial control approach where you will account for emissions from assets, investments, and stuff controlled by the building. If it's a rental building, stuff like that, that will fall into your scope 3 because they're tenant emissions, but you're also going to be calculating them. And then lastly, you have your equity share approach. So this is where, say, you might own 10% of a business, or you have a loan that's 10% of the value of the car or anything like that. You are responsible effectively for your percentage of ownership. So if it's an investment in a mining company, for example, you're responsible for 10% of their emissions. Quite simply. If your investment increases or decreases, your responsibility towards the emissions will also fall proportionally to that too. So moving slightly forward now, we're going to move on to the actual calculations, sort of how you're doing them, what you need to remember when you're doing them, and where to go from there. So we would have touched on it probably a couple of times today, several times last or 2 weeks ago. When you're performing your calculations, there's a number of guiding principles. If you, as I would have said last week, if you can remember these or keep them to the forefront, you'll be fine. So first one is transparency. That comes down to your use of estimates or averages, or why you say did a calculation the way you did. Don't try to hide it, be upfront about it, and you'll be good to go. Consistency. If you choose a method for calculation, stick to it. And if you make a change, call out why you've made that change then after that. You don't have to go back and readjust everything if you make a change, but it is important to give the context of why you've changed something. And that happens. It can be because a more accurate emission factor came to the fore. It can be because the raw data that you now have access to is more accurate. So maybe it's because you've changed from secondary to primary data, for example. And then accuracy. Obviously, try to be as accurate as you can. Review your calculations, review your data collection process to ensure nothing is being missed. That should be done almost as often as your calculations are done, that you're checking for your gaps, that you are ensuring that the right emission factors are being used and so on. Typically, emission factors are updated a year post. So for example, now that we're in 2025, 2024 emission factors will start to come live. So update those emission factors that you're using as and when you do. Our system does that first, thankfully. But if you're looking to just measure on an Excel, just document where you got them and when you updated them. Your calculations can be activity/consumption based, or they can be spend based. They can also be a combination of both. So if you think of shipping, some businesses have multiple shipping partners, and the level of data or the data set that each shipping partner can give is likely to be different. So as I said, DPD can give you that report. It tells you all the emissions you saved and the exact number of parcels and so on. But some businesses might be only able to tell you, look, you've spent X amount of money with us this month on shipping, or you did 10 shipments with us. And as a result, you'll have to change it up. That again is no problem, but you'll need to then, when you get to your methodologies and so on, you need to be able to call out the different calculation methods you chose and why you chose them. The maths behind the actual calculations is quite easy. And it's probably one of the things that surprises people the most. It's at its essence the most basic sort of algebra and math sum that you can imagine. It's effectively x times y equals your output. And by x times y, I mean it's your consumption levels or your activity levels times the emission factor, and that equals carbon emissions. The emissions factor is effectively a value that represents for 1 unit of activity how much carbon emissions is generated. So if we had a carbon or an emissions factor of 2.5 for 1 litre of diesel burnt, it would mean that if I burn 1 litre of diesel, I'm producing 2.5 kilos of CO2 equivalent. Now, that's obviously a very basic example, but the premise applies to everything. If you're shipping, it gets slightly more confusing. Not confusing, really, slightly more complicated. You have to account for the weight you're shipping as well. So that would be X times Y times C. So it's the distance traveled by the mode of transport and the weight that produces your carbon emissions. Um, but overall, it's quite simple, and we can provide guidance on all of that at any stage, really, as and when it's needed. You'd be quite surprised as you get even into scope three how, I suppose, quite approachable the calculations are, or even with maybe secondary data as well. So one thing I've touched on today quite a bit is auditability. The reason for that is, as I said, it's probably the hot topic within CSRD, but it's becoming increasingly more popular across the board as transparency grows and grows, and there's more of a spotlight on this sort of industry on calculations and ESG in general. You're going to have to get on board with it effectively. It's no longer okay to just produce our scope 1 emissions are 90%. You will have to start um, giving out actual figures and access to your calculations. So, as I would have mentioned, all your records should be linked to the raw data in some way, shape, or form, whether that's attaching it to the actual record, like on the platform we have, or if that's saving them into a file in a very specific, neat order so that it's easy for anyone to access it. It should be done. Raw data is, as we would have discussed, it's your utility bill, it's the export from your business expenses, it's the information your shipping partners send to you that detail your consumption levels. Within that, the users who create your calculations or send the data or make any changes or who have the authority to make changes should be tracked. So that it's very obvious then that you can say, if James went and changed something, you can contact and say, well, look, why did we make that change? It's not documented on the record and we need to document it. And then lastly, ideally you would have some form of role-based access control over who has access to the records as well. So whether that's a case of there's only one person in the business who has access to the platforms or to the overall Excel, or maybe it's two people in case they're out, that it should be controlled, because ultimately, depending on the person's level in the business, they might only need to see a high level report every once in a while. Someone will need to see all of it. And as a result, the sort of access should be proportional to that. The last thing I'll finish on is something we touched on last week is continuous improvement. And if anyone has questions, then we have, I suppose, maybe about 15 minutes really to run through any questions you have if you want to load them up. So continuous improvement. One thing I would have touched on there is moving from secondary data to primary data. It can be often much easier to start with your secondary data, get your rough baseline, and then work on putting in place the processes. So one example I gave was your business travel is getting staff to add more and more detail to the expense report so that when the export comes, you know exactly where they flew to, you know where they got their taxis to or from, and so on. That allows you to then go and calculate actual activity data. Where possible, work with your suppliers to encourage them to also get on board or provide, say, maybe a bit more granular detail instead of just 10 shipments or 10 grand of spending with them. This will allow you to improve your calculations, but it'll also allow them to start calculating their own footprint too. Look to expand on your scopes. So most businesses, they'll start with scope 1 and 2 and small areas of scope 3, such as your business travel, your work from home and commute and so on. That's perfect. It's a brilliant start. But as the years go on, look to improve on that. And by that, I mean expand the scope of your scope 3 calculation. So include more categories. Include, say, maybe the company Christmas party if there's a load of hotels taken for the night. Include maybe any server usage and so on. Always look to improve on your process. That's your data collection process. That is your process of actually performing the calculations, doing your checks, making sure your reviews are in order. There's always little small change that one will make it more efficient for you as a business, but it will also make it easier for you to ensure transparency and accuracy going forward. Encouraging your suppliers moving from secondary to primary data, it's effectively improving that data granularity and the accuracy. Always look for the best available data set that you can, and then improve your process everywhere. That's effectively us now for today. More than happy to take any questions. I know we had a couple of issues with sort of sound and slides potentially at one point. This will all be available to you guys at the end, as well as if you have any follow-up questions, my contact details will be within that too. But I'll hang around here now for sort of the next 10 or so minutes, so feel free to ask away. Can you explain again the different approach needed when looking at business travel calculations? You spoke about it at the start. Yeah, that's no problem at all. So I suppose from our experience doing the calculations, typically when employees input their expenses or so on, whether it's to Concur or anything like that, they kind of put in as little data as they can get away with and submit the expense. So it might just be a receipt saying, airfare for travel to client X. And as a result of that, you'll be doing the calculations using the spend-based method, which is no problem at all. It gets you moving, gets you started. Ideally, however, you would have the employees input that I flew from, Dublin to London Heathrow. And if they give you that level of detail, we can actually calculate the exact flight distance. And so then you're actually relying on I flew, say, 100 miles, whatever it is, but on an economy seat, and you're using activity data as opposed to the spend base, and it's more accurate effectively is the answer. So if you can get them to do that, whether it's for a train or for a taxi, that you took a taxi from Stephen's Green to, let's say, I don't know, the Three Arena, for example, we can calculate the distance driven between those 2 points as a result of that, and again work out the exact kilometers traveled on a taxi as opposed to saying they spent €10 on a taxi. It just allows for a slightly more accurate calculation. It is typically a process, though, of getting people to input that sort of level of detail into an expense report. It just depends on what one's in place. There is some services out there where if you are inputting flight details, they'll actually calculate the emissions for you. So it depends on which one is operating within the business. How do you record average carbon intensity per user from servers using Google tool? If you could advise again. Yeah, that's no problem. So Google, Azure being Microsoft and AWS, they actually have links. We can share the links with you guys as well if you want. This might be something I'll send out with the materials. When you access that link and say input your details, after sort of 48 hours, it'll pull down your carbon emissions for the entire business over the period of time. So you can go in, you can sort of slice and dice that data and analyze it. But one thing they'll give you typically is the average intensity per user within that dashboard that they have operational. So if you have 100 employees, you can sort of work out, okay, well, look, on average, if we add 10 more employees, our server emissions are going to go up by X. Now, while that being said, the good thing about Google, AWS, and Azure is they're almost all renewable. It just depends on what region you're in if they don't already have full coverage. So they'll tell you that as well within your dashboard. So what you might actually be recording by doing that is the carbon emissions saved by your use of Google, Azure, and AWS. But we'll share those links with you ahead of the next webinar. You'll be actually able to get your IT team to simply log in and go from there. If you use a different server provider, it's slightly more difficult. They will typically be able to either give you a carbon emissions report or an energy intensity report. If they don't, they will at least be able to tell you whether their electricity provider is renewable or not. And from there, then you can work on estimates. Is there a list of emission factors available to calculate emissions? Yeah, there's a number of different publicized sources. You have the EPA in the US, you have DEFRA in the UK, that's published annually. That covers everything from hotels and business travel to material usage if you're in construction to waste and recycling. And they can easily be accessed simply by either typing in the EPA or by typing in DEFRA emission factors, and they'll actually pull up the Excel that they that they use. Um, Just on the emission factors, I suppose probably the one benefit of the platform is that they're all loaded in by time. So you don't have to worry about changing 22 to 23 and so on. We'll do that for you, as well as keeping them up to date or expanding on them as needed. You can also use, academic research. If there's a report you find, if you've something that's very niche, you're looking to calculate, you can use academic research. It comes back to just that transparency thing of just simply calling out why you're using it or